Good morning. So we have the monthly options expiration day. Well, what does that mean for trading? Well, historically, it means a slight negative bias, especially in the morning. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:13 a.m. Central Time, and I'm recording this in preparation for the market day of March the 20th, 2015, the first day of spring. And as always, full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in, see what happened in the overnight action. Well, generally positive, about 1/3%, with the Dow the most bullish, coming in at the time this was cut about 0.5% up. Crude oil was down about up 1%, so it continues to have quite a bit of bearishness in that market. Other markets, the euro and bonds and gold, all up somewhere between about 2.2 to about 0.4. So really almost everything we look at in terms of our key markets was up, with the exception of crude oil. And overseas markets also very bullish. China was up about 1%. Hong Kong was the lone key market that was down about 0.4. Japan up about 0.4. Europe almost up 1%, so nice day in Germany. And then the United Kingdom was essentially scratch. In terms of key macroeconomic reports for today in the United States, it's really quite benign. You've got one orange flag report with the FOMC member Lockhart giving a presentation, so we've got to be aware of that. But that's really pretty minor as it goes with macroeconomic reports, and nothing to get particularly excited about. In terms of volatility, the thing to note here is just how low some of these volatilities are getting. Notice that the Russell implied volatility a 0. This means it is the lowest it's been in the last 52 weeks. So as you define your strategies, as you define your entries and these kinds of things, you need to take into account that you're trading in a very low vol environment, and then as vol expands, that will have an impact on your strategies oftentimes. So please be very, very careful about your especially if you're trading options. You've got to take into account Vega and the impact of Vega of a rising implied volatility environment, because that could very much impact whether you're successful. Even if you had your trade premise right and you're bullish or you're bearish and you got the direction right, if you don't get Vega right, you could find out that you still lose. In terms of standard deviation moves, there were no standard deviation moves yesterday. Relatively quiet following the large action the prior day. That's probably about it we need to say about volatility today. In terms of our regular report, obviously crude oil rolled over. You have our intermediate term phase opinion, still phase 3, higher highs and higher lows is the call. Things have definitely improved in the last couple days since the FOMC announcement, but we still do have some cautionary statements. IBD status still remains uptrend under pressure. GMI index a perfect 6 out of 6, so all go there. Active trader market posture is bullish, and is actually in a couple of the indexes, as you'll see in just a moment, gone very bullish. Portfolio investor position sizing opinion still remains reduced at 50%, and this is related to the IBD status of uptrend under pressure. From a volatility standpoint, we are showing a 75 to 100% of full position size. Market timing opinion today and 3 days neutral. Really not much trader edge one direction or another. Market postures, as I said, a little bit of a mix. You got the Russell is very bullish, you got the Dow as bearish, and you have the NASDAQ as very bullish. and the most important market, the S&P, as bullish. So very mixed kind of situation here in terms of market posture, so you should take that as part of your measure. We remain with hedge warning status, threshold level 0 plus, normal with some elevated factors in play. From a volatility standpoint, the only thing that's really kind of warning us is the fact that we've had 5 distribution days in both the S&P and the NASDAQ. From a trend, we've had the recent swing low, but we need a higher high, and we're still waiting to get that in our S&P market. In terms of new highs, new lows, you see very healthy yesterday, 279 new highs against 92 new lows. So we're certainly liking that. Intermarket risk aversion indicators really are warning that things may be not as healthy as you might like to think it is. So be aware of that. Several of these intermarket risk aversion indicators are flagging for a risk-off condition. In general, though, option income strategies, VIX is inside the acceptable window, so a go for your appropriate option income strategies. Just remember to take those Vega considerations in. You need strategies that benefit from increasing volatility, not from falling volatility. That would be very much going against you right now. Covered calls, kind of a mix between in the money and out of the money strikes would be called for, and then with put selling, look for those dips. We are slightly bullish, but look for those dips for selling puts against that core portfolio of stocks in the position size you are willing to own. And let's see what else is new for today. In our sector individual market postures, you see pretty good shape except for energy and materials. Utilities also showing some stress, as is consumer staples. But in general, this is starting to sort itself out, and we're starting to see a little bit more consistency than we had there for a number of days ago. In terms of percent change yesterday, only healthcare was positive, and that certainly has been one of the most consistent performances and for going back months now. So that certainly should continue to be your focus. In terms of industry groups, you actually have retail as number 1, railroads, internet, biotech, and healthcare as 4 and 5. So certainly there's that theme once again, followed by transportation. And then you notice that pharmaceuticals is next. So very heavy industry association here with healthcare. When you look at the top of the industry groups, healthcare really does dominate across a number of these sectors. So that certainly seems to be the primary place to go. As always, greatly appreciate your liking us on YouTube and your favorite social media platform. Additional information, as always, is available on the website, falconglobaltraders.com, about all of our products, including our 3 live trading rooms. We have an equity room, we have an options room, and of course a futures day trading room as well. In addition to that, we have day trading products for what we call the daily price guide, just an invaluable resource to help you understand where all the key support and resistance levels are for day trading 16 key markets. Disclaimers, as always, just hit the pause button if you need more time to review this. And then we greatly appreciate you each and every day in the Falcon Global Trading community. We'll look forward to seeing you back here, same place, same time, on Monday morning to get that trading day kicked off right.